What is going on, everybody? And welcome to another weekly update. What I'd like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. Now, we've had a very, very informative week nonetheless. The market has single handedly been pushed up by ChatGPT. NVIDIA had earnings over the past week, and they had some really huge expectations going forward and caused the stock to absolutely explode, which in turn has allowed tech to continue to push up the NASDAQ to essentially new highs for the year. But everything else, the SPX and Russell, which is still at lows here, have not hardly moved. And so those top seven stocks essentially all had something to do with AI, and that's essentially what has been saving the market over all the drama that we have gone through. Now, it is a very, very, like I said, informative week over the past week. Let me go ahead and pull this up. As per the usual, we had the FOMC meeting notes. We had a lot of debt ceiling talk over the past week. The banking crisis has gone quiet nonetheless. Before this week, last Friday, Yellen said there would be more mergers. There will be more bank failures as we are waiting for something to break. And at this point, I think what we're doing is we're continuing to put on the pressure with rate increases until that changes. Now, one thing to mention here before I start getting more into the details of the notes is that we need to understand that coming into this week, the expectations for another 25-point basis moves was extremely low. We were actually expecting to pause, but now, though the chances of another 25-point basis move is essentially gone from almost a 13% chance since last minute monetary policy to now like a 75% chance of that happening, given the fact that we are continuing to see inflation increase in a lot of different avenues, especially with the PCE that came out on Friday. So with that being said, let's start getting into a little bit more of the other information that we got this week. FOMC meeting notes. So some of the highlights there is the Fed sees uncertainty over further rate hikes. They want to leave the option over to be able to essentially do increase rates when necessary and to pause when they want, but they want to heavily rely on the data like they have been for essentially this whole time being, even though I think Powell has been very misguiding during other different aspects of this whole fight against inflation and giving some very some hawkish tone to a lot of his different sentiments, but then not only that, but being very dovish as well, and I think misleading a lot of people into what is really going on in the world today. But with that being said, we have they essentially announced that there will be a mild recession in late 2023. Now, as we've talked about here, I believe we've already been in a recession for a while. But the biggest thing being is that they are giving more of a time frame, which they didn't give in the last notes. And then they talked about a default and how much it could actually threaten our current market state, which is something else I want to get into and I have highlighted here. But they said that inflation is still unacceptably high given the circumstances. And even looking over, the past, something else that's coming up is we do get a lot of housing data, which I said is important to pay attention to because it's not really going to affect the market unless you get a crash. And as of right now, the reason houses are still turning over very quickly because it's very expensive. Um, and people are afraid because rates are almost back up to 7, and JP Morgan essentially came out saying that there could be the possibility of 10% interest rates, which is absolutely absurd. We haven't seen obviously in a very, very long time, but it is a possibility is what he was essentially alluding to. But with that being said, there is a lot to digest, but yet the market is being held up by, again, those seven stocks. And so the FOMC meeting notes, just to wrap that up, it's ultimately, again, they're trying to leave their options open, but they do recognize a mild recession. Again, there is no such thing as a mild recession. Things are getting worse. And when I was talking about the housing stuff, you have to understand that the rent to own gap is huge right now. It is very cheap. And just saying so, just to own what you could have owned over a year ago has now jumped over $1,000. It's $1,000 more expensive to own than it is to rent. And so they're making it extremely hard, especially with high interest rates. Not only do you have to pay an additional $1,000, you got to be able to qualify for a new home. And it's imperative that, if you have a low credit score, that you have more, um, essentially more, a better chance with the um, additional help that the federal government is having for lower credit scores. Excuse my my brain is like slowing down for a second, but nonetheless, um, and so with that being said, I think that set up there with the housing industry and the fact that there's such a big gap between rental and housing units is leading to, or alluding to, the fact that at some point Blackstone or one of these big institutions will start flooding the market, or the market itself will start putting more houses up for rent. For sale, because people need to tap into that equity to be able to afford to live at this point. We haven't gotten to that point, but I think we're getting very close to that point, as a lot of people are getting laid off left and right. And we haven't even hit quote unquote recession from how the government essentially has talked about, because we did have GDP over this past week. We haven't gone negative, but we had another full point drop, which we have seen some big drops in GDP over the past couple GDPs that we've had, and decreasing at such a rapid rate because of the rapid increase that we've had with interest rates. And understand that the interest rates have a lagging effect. So we are just now starting to see every GDP that's coming out, it's having huge drops in it. Essentially, the next quarter will be a negative GDP drop. I thought I would have been this quarter, but again, it looks like we could squeeze out one more quarter before we hit negative. And again, a lot of these reports are refined, and this is what is very, very misleading and very frustrating. Is a lot of these non-farms, they get revised down a lot, and then once it gets revised after the fact, it's like the market doesn't care about what happens after the fact. It cares. The market and the algorithms are based off of the current events, right? And so when you start putting current events in there, they're not going to be traced off of what's going on after revisions. And so you have to understand what is the initial headline news of what it's being announced. That's what the algo goes off. It doesn't go off of, okay, well, this report a month ago has been revised down, and it's all these other revisions that they've done. They've done this for inflation, right? We're not taking into account 2 years anymore. We're only taking a year, and we're still having problems with our report. So that should tell you how bad things really are. Again, they're trying to graciously navigate the market to come to a point to where they can fix the market, and they're trying to buy themselves time. And everything that they do is buying themselves time to try to fix it in hopes that they fix it. If they can't fix it, that's when you get market crashes. So there have been a lot of times where we were able to get out of those particular situations before they got way worse by essentially misguiding essentially the nation. And so with that being said, that was FOMC meeting notes. Again, there was a lot of the same stuff there, but the biggest, again, key takeaways there was essentially they talked about the debt ceiling, which is another thing I'm going to get into here in a second. And then they talked about essentially actually having a recession towards the end of the year. So they're actually acknowledging it. Over the last report, they essentially acknowledge that there could potentially be a mild recession. Now they're saying there will be a mild recession. I think it will come a lot sooner than what they're essentially advertising as well. So that's something we need to keep in mind. Now, over the last week, we've essentially had the debt ceiling talk. Obviously, that's been a big topic of conversation, as next week Next Monday or next week is the June deadline. And a lot of misleading information. We essentially, by the end of the week, we only had like 34 billion, I think, left. We have to understand that just to run things, I think it's like a $16 billion um, burn rate that we have for the US. And so this is how close we are to essentially defaulting, is that they couldn't come up. They said they would have a deal by Monday. They didn't have a deal by Monday. The market starting selling off by Wednesday till we had Nvidia essentially have these huge expectations that they essentially like 10x what their expectations would be because of ChatGPT, and essentially saved the market from tumbling this past week, as everything else other than the hype of a potential deal, it was on and off all week. Essentially by like Thursday, nobody was talking. There was walkouts last Friday. There just wasn't a deal. This thing came all the way into Saturday before a deal essentially said that would be done. And so, with all this drama that's been going on with the deal, the debt ceiling is raised now for 2 years. Cut spending only by 50 billion. This huge thing was about spending, and all they put in was 50 billion. And as I talked about, the burn rate is so high. 50 billion really isn't nothing. And so, with that being said, 10 billion of the new IRS funding clawed back. So they're pulling some out of there. There's no budget cap of after 2025. No new taxes or government programs. Boosting defense and VA spending. Let's see, what else do we have here? Domestic program spending frozen for 1 year. The deal is argued in principle. This was late last night, and a lot of work to do, according to Speaker McCarthy. So again, this still has to get through, the House, the Senate, and all these things have to be voted on and signed on before the 1st of June. And here it is. I'm recording this Sunday morning. Maybe that will get done, maybe not. But the problem is we started getting threats about this essentially um, on Thursday, saying we're going to lose our triple A credit score. And what this exact scenario played out back in 2011, where they played it so close. We obviously did not default, but we got downgraded on our credit, and that pretty much crashed the market. And so right now we're running against the clock right now. If the fact that we didn't get this deal done until late Saturday, and still it's still quote unquote in process and needs to be voted on and everything else, still needs to be signed before not any of this is done, and you have until the 1st. Will they get it done? They might. We'll have to see, but you're still running the risk of getting essentially our credit impacted, running it so close. And last time I talked about 2011, they did the same exact thing where they ran it so close that we got downgraded. So I have to see what happens over the next couple days when market opens on Tuesday, and see what happens. But that being said, we talked about the GDP stuff. Again, could be another quarter. PCE came in hot, so inflation is still really hot. Again, there's a lot of stuff pointing to recession, and yet the market continues to rip up over off of hopium. It's not actual numbers, because Nvidia numbers were not fantastic, but again, the forward outlook of this hope that this utopic euphoria, essentially even JPM has come out now and essentially said that they are going to use AI for their algorithms and picking stocks and stuff. So it is quite interesting to see how everybody's jumping on the AI bandwagon to pump up their stocks to get them back up, as a lot of them, again, like I was talking about, are 52-week lows. If it's not in this top 7 stocks, technology growth stocks, everything else is pretty much dead at this point. So let's go over the weekly event schedule here. So Monday, the market is closed. So be mindful of that because of the national holiday. Wednesday, we do have Beige Book. So it's important to watch in there. The Beige Book, like I've stated before, is going to give you insight into the next FOMC meeting notes, and the next monetary policy. that policy isn't till the 14th, so we're about 2 weeks out from that. We do have non-farms. Again, non-farms are going to be really important. I keep saying that, and yet, these numbers keep just going up, which is absurd. That we have never had parabolic numbers that are essentially being uh, portrayed out there every single non-farms. It's so absurd that there's obvious, it's blatantly obvious the essentially manipulation that is going on with the non-farms. And again, we're seeing that not only do they do that, they announce them, but then they revise the last ones that we've had. So we've already been dropping quite dramatically on non-farms, and we'll see what happens coming into this week. So those are the big events this week. Again, the debt ceiling stuff is going to be big this week. You have to understand that. That's going to roll into this week. That's going to continue to wreak havoc. And then once the debt ceiling stuff is done, if we haven't essentially cratered by then, I think we're going to start getting more banking information now that the debt ceiling stuff is starting to wrap up. I don't think we'll see what happens with the debt ceiling stuff, but I think we could potentially start hearing more banking stuff by the end of Friday. But we'll have to see by then. Again, everything was fine and kosher for about almost a month, and then we started getting massive bank information again. And then we were found out from Jamie Dimon that you shouldn't be shorting banks, regional banks, because it's just unfair, considering that they like to manipulate everything and you can't. So, with that being said, we have monetary policy is until the 14th. Next core is on the 13th, so we will get another core before monetary policy, and then you have this is the watch list. So I'm trying to keep last week's on here. That's what's in the parentheses here, and then that, and then I'll put the news, essentially what is projected for the week next to it. So last week you're seeing a big jump in SPX, you're seeing a big jump in tech. Not really seeing a huge, you're seeing a little bit of a decline in the banking sector, but value is pretty even keel this week. So, again, if there is big concern in the banking industry or the debt ceiling, this is why there's a little bit more priced in here. The fact that they did have a deal, I think, really kind of decreased this from being any higher than what it is. But you do have some big events going on with debt ceiling and with non-farms coming out. So those big events could have a big impact. And then you have to also understand that it is a short week. When you have a short week, there is a lot more manipulation because a lot of volume really isn't there. So the market gets pushed around pretty easily during times like this, or it could be pretty dead. So we're going to have to see. Normally it's sell in May and go away. But that just has not been the case this year. This year has been heavily manipulated with low volume, right? And you have to understand we've pretty much been that way all year, and so we'll wait and we'll see what happens in there. But with that being said, let's take a look at the charts. So again, like I've talked about, the Nasdaq has been going absolutely parabolic because of those stocks. Obviously, it has more weight. A lot of the top 10 stocks or top 7, 8 stocks have more weight, and they've been running parabolic, especially Nvidia. And then you have Tesla had a pretty big move back to the upside to test 200 again this week, and so those big ones have moved up. But as you can see, we're still at the ceiling here of the SPX, and we still cannot break roughly that 4,200. We'll see if we start selling off again the beginning of the week on Tuesday. The market will open tonight, I believe, but the market, it just won't be open to trade tomorrow. So I'll still be able to watch the futures and kind of see where the market is. We'll see if we can break above it or see if we'll hold below it. It'll be interesting to actually watch because of what is going on with the debt ceiling stuff. So we'll see what happens there. But again, still watching the 4,200, watching that 4,100. There's still room down to that 40.59. I think could be another potential bottom here if we do break the 4,100. So to really get a flush, you're really going to need to break below that, the 40.55 break, solid break for us to start selling off more. And again, I think if we do break up, it's just going to push you to the next level to 4,300. But we'll see. So as anytime we get really bad news, the market will sell off, and then something seems to pick the market right back up and just keep it in range. There's massive sell-offs, massive push-ups, sell-offs, So you're pretty much playing ranges like this. It's like every other day you get one really bad event and then one really good event, and you're looking at a about 130-point move through the week. That seems to be almost common over the past couple of weeks. That's all we've been doing is getting these massive sells and pushes, and it's just chopping sideways, and we can continue to chop. Right, that could be something that just happens. Right, we may not actually get a big move to the downside or to the upside for a while until we get a clear understanding what's going on, whether that's something breaking or we start pricing in the recession that the Fed is talking about. So, with that being said, that's for SPX. Let's take a quick look at Bitcoin. Bitcoin has been struggling a little bit over the past couple weeks. There's been some negative information coming out, but not negative enough to sell it off past the 25K mark. Again, the 31K mark is kind of where you're looking for the upside. So really watching those levels there. Take a look at gold. Gold is still holding so far. It's got a pretty solid support here at the 180. As long as it can hold that, this thing can continue to make a new high. Again, it could drop close down here. It can drop close to that 170 mark and still make a higher low. So just be mindful of that. There was a huge pullback here, and then we pushed up higher. So you could potentially drop down to the 173 and then push higher. So just be mindful of that. So that's something to watch there. Again, the reason why we're watching gold now is because of recession. Gold will kind of tip its hand on if they believe a recession is coming or not. So then you have Tesla. Again, hard rejection off the 200. Bulls, you're going to want this thing to break over 200. You want this thing to continue. Bears, you want this thing to break below the 178 for this thing to start heading back lower. Again, still a higher low compared to here, compared to that 207 mark. We'll see if this thing starts selling off. Again, right now what we're dealing with is the digestion of the debt ceiling deal. Again, my biggest concern there wasn't that the debt ceiling wouldn't get passed. They said it wouldn't actually get passed until Saturday, so I don't know what's going to happen there. But the big concern for me was always being is if we're going to get downgraded on our credit. Again, it makes it harder for us to get loans in general as a country. So that's kind of what we're concerned with and why we crashed on the last time. So we'll see what happens there. That could lead to a whole different cascading of events, but we'll have to see how that does play out. Palantir, massive rip again, hit over 14 over this past week, but then sell off pretty heavy. We'll see if it can hold above the 1320. If it opens below, this thing could start selling off. Again, I'm looking for this thing to gap fill eventually. I think this over parabolic move here, you can't expect this thing to just keep going up. I should get a pullback here, even if it's 50% of the move to the $10 mark. Could be a strong possibility, but ultimately, I think we're going to gap fill at some point to fill that gap. Again, it's very heavily manipulated right now, just in general. So you're getting these massive moves up, but they can't hold forever. And I know the market could make you go crazy because it doesn't make a lot of sense. As PA again continuing to not break out of 220 or hold the 195 is still holding. So we'll see what happens there. But the market can remain can drive you nuts, and to try to figure out what exactly is happening. This is why I try not to go too heavily macro focused, because a lot of stuff that happens in macro takes a long time to play out. So I'm trying to adjust on the fly on different things. Just be aware of the events that could make it occur. This is why I bring up the weekly events to try to aim to see what could potentially happen from those events, kind of knowing what the next 6-month macro is looking at. Not the overall macro. I do talk about a lot of stuff with the overall macro that could potentially happen, but ultimately understand that the intraday moves can differ very from the overall macro. And that's what I talk about a thesis. If you have a thesis, to know what that is, but ultimately understand it could be a long time for that is actually done. But if we do start crashing from one of these events, you know why it's crashing is because we were essentially talking about it for a while. Again, there's always some doom or gloom thing that could potentially bring down the market, but right now you're dealing with a lot more than your typical scenario. at this point. So JPM, again, still trying to hold. We'll see if it can hold above the 138. If not, this thing could break the 135 and then potentially gap fill this down to the 123. So watching that this week. And then Goldman Sachs is still holding roughly that 320 mark, has room up to essentially the 346 mark. So watching that there. Bank of America is kind of sitting flat, just like everything else. So that's pretty much what I got. Again, I don't want to make this video too long. There's a lot of info to digest from last week. There's some info that could lead us this week. Again, the debt ceiling stuff is going to remain the headline thing until we get through it. And there's a lot of impact that could come from this pushing to last minutes with the debt ceiling. Again, the deal still has to be done before the 1st. So if they're saying that it's not going to be done to the weekend, Yellen, I did believe, say somehow she magically got a couple $140 billion by, I think, the 2nd or something like that. So I don't know where that money's coming from. But we're going to have to see what happens. There is a lot of COVID money that was never used that is still floating around, which is interesting to hear about, and what's actually going on with that money. So with all that being said, if you made it this far, go ahead and drop a like. And until next time, I'll see you guys later.